95% of traders lose money because they're not patient and they don't have a mentor and they don't have guidance and they don't have structure in the way that they invest. A lot of people ask me how I'm so consistent with making money on options, and I'm going to break it down in this video here, okay? Because most people don't understand my strategy. Most people don't understand how I do things. And it's not just this quick, every day I'm making money kind of thing. I make money every single day because my strategy is rolled out for 3 months, and that 3-month mark is hitting every single day, like 3 months from before. So I make money every single day because I have deals in the pipeline that are hitting every single second, contracts in the pipeline that are actually being exercised and being sold off. But the reality is my strategy takes 3 months to really execute. When I look at trading stocks, the biggest thing that I look at is I look at stocks that are falling out of their pattern, that are at the higher or lower end of the Bollinger Band, okay? And this is a very simple band. The middle is a 20-day simple moving average. The higher end is where the price is more so overbought, and the lower end is where the price is more so oversold. And the Bollinger Band is a great mechanic. It's a great indicator. You're not going to know where the stock is going to move, but it's a good idea of whether you should implement a short or a call. And if the volatility is high, the Bollinger Band is going to expand. If the volatility is low, the Bollinger Band is going to more so condense. So it's a good extrapolation on volatility as well. But I use the Bollinger Band along with a lot of other things to understand where the stock is going to move, and I look at more so trends. And when I look at trends, I look at stocks that are falling out of their pattern. I look at stocks that are, out of their normal 20-day moving average. And if they fall too low, or something is being hit, or something's being crushed, or it's a red day in the market, that's where I'm going to more so implement a call. Now, I do a lot more calls than I do puts. I do a lot of protected puts where I grab volume when the stock market is falling. But what I really look for is a stock that's in recovery. So let's say I have a stock like Apple, for example, and it's a really big stock, and it's a large cap stock. I only really trade large cap stocks, and it's doing very well, and all of a sudden it falls down. All of a sudden it gets crushed. All of a sudden it gets hit by market makers. I'm going to do a call option on that and hope it returns back to its normal volatility. And the way I always explain it to people is that, like, if you take a rubber band, and this rubber band is not going to be, broken. It's a very strong rubber band. It's a large cap rubber band company, okay? And you stretch it and stretch it and stretch it and stretch it, okay? There's a lot of tension there. And the moment that someone lets go, this rubber band is going to come flying back. I can't necessarily time how far this rubber band goes, but what I can do is kind of be there for when it's released, and I can grab the volume and the energy and the inertia and the money, the stock game of when it's coming back to normal. And stocks go up and down. One thing you got to understand about stocks, they go up and down. And although there's microscopic ups and downs every single day and microscopic up and downs every single week, in the grand scheme of stocks, the up and downs are very predictable. They're general trends. So the up and down goes this way, it goes that way, it goes this way, it goes that way. And even this up and down is part of a larger up and down that you can see in a 5-year, 10-year chart. So stocks move up and down because market makers are always on the other sides and they want to balance it. It's a ping pong game going around, and there's a general movement up for a lot of stocks, and I'm looking for the general movement down because the up is more likely, the up is going to happen, and I time it out. I really give myself a lot of time, so I don't want theta to destroy me. Theta is time decay a lot of times, just in a simple format. And that is what kills a lot of traders. Most traders, they fail at options because they let time decay just absolutely crush them. That's a big thing that most people don't understand about option trading. You need to be really good at understanding theta. Theta is the most important thing. And also delta as well. I'm not here to just focus on one thing, but most people don't understand that, like, if you have a bad setup with time decay, you're not going to really be able to make money because the time decay is going to eat that stock. So that's one thing I look at. Another thing is when there's more volatility, that's good with options because the price can fluctuate more, but you really need to get in a good entry when there's higher volatility. When there's lower volatility, you really need to time it out and have more so structured movements to know where something is going to move. So the way I make money with stocks is by looking at recovery. Let me talk about my percentage win rate because most people don't understand this. I actually lose more trades than I win, okay? And people are like, what the heck? Well, the reality is my percentage gains on the stocks that I win are 500 to 1,000% on the contracts I win, I should say. And when I lose, it's only 100% because the way that options work, you can only lose 100% of the options value. You can't really have an infinite loss here, okay? So what I'm really doing is my 35% winners, right? Let's say I take 20 trades a month and I have 35% that are winning. That's roughly 6 to 7 trades. Let's just say it's 6 trades, okay? Just for an easy number down. That would be 6 trades that win. Let's say each position is $1,000. So I have 14 that lose. 14 that lose, that would be $1,000 each. That would be $14,000. Let's say I have 6 trades that win. that would effectively be 6 times, let's say a minimum of 500% per trade. That would be 6 times 500%, really, times 1,000 as well. That would be $30,000. So I would make $30,000, but I would lose $14,000. So I'd be a net profit of $16,000. And that's really how it works. That's how I'm profitable, even though I'm losing more. Now, my average percentage hit per trade is 35%. Now, last month I did 42. Some month I do a little bit less. But overall, I'm trying to hit around 30% to 40% all my trades. And a lot of times I do. I mean, pretty much every month I've been consistent. And there's trades that fail. There's trades that go bad. But there's trades that also hit. And my other strategy when it comes to trading is my trimming. I'm really good at taking profits. Most people, when they trade, they don't really understand how to take profits. They either try to get the peak Hail Mary pop profits and sell everything at once, or they just are selling too soon. What I do is I sell the initial investment a little bit earlier on. So my first sale, my first trim is a very conservative trim where I'm trying to get my initial investment back, and I want to sell not necessarily at the peak, but kind of like the lower peak of what the stock is going to be, okay? Not the tippy top peak, but in a position where the stock is peaking, but not all the way. And then once I have that, once I have my safe money recruited and secured, and sometimes I'll just make 100 to 200% of the initial stock value, then I'm really going to try to grab those extra profit, 300, that 400, that 500, that 800, that 1,200%, where I start making that money. And there's many times where I hit over 1,000% on a couple of contracts. I'll take 25 contracts, for example, and my 1,000% gains will be on 4 to 5 contracts. But that 1,000% plus gain will average out all the gains from before. So my first initial gain may be 100%, maybe 200%, but from there, that 1,000% gain will really swing everything to an average of 500 to 600%. And that's what offsets my losses. My losses are controlled because so many of my trades are so profitable on the higher end. And there's people that run the strategy with penny stocks too, where they're hitting like 1 out of 20 trades with the percentage profit is like 8,000%. It's absolutely stupid. I'm not one of those guys. I'm more so conservative. I'm more so controlled. And the biggest thing I look for is being able to replicate this. I've been doing this for, a lot of time now, and people follow my strategy. It's easy, it's manageable, and it's a lot better than day trading. The other thing about swing trading is that you're much better at analyzing the option and not being too trigger happy. When you're day trading and scalping on a traditional level, like when you're in front of the computer, like boom, 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 I got a 3 monitor setup right here. You guys have no idea. That is very anxiety driven. It's not good for you. It's too much stress. Like you're gonna be dying all day. It's fun in the beginning, like when you get a little bit of dopamine and you feel good and you're like hitting trades and you're like, yeah, I got some trades. But over a long period of time, that is the most miserable thing. You're chained and married to your desk. You're chained and married to your computer. And I personally would never recommend it for anybody. I know when you're brand new, it's fun to look at stocks and make $100 to $200 a day. And you can easily do that if you have $1,000 in the account and you're making, 10% gains per play. But overall, that's just not the best thing. So my strategy is more so focused on recovery. I'm more so looking at options to return back to their normal level. I'm very conservative and structured with the way I invest too. All my positions are the same size. I take a percentage of the account value. And more than anything else, I am really looking at the right thetas when I'm buying options. I'm looking at a good bid-ask spread. I'm looking at the Bollinger Bands to look at the volatility and everything that's going in. Like my picking of the stocks itself is where the magic is. And that's where the magic of the group happens. And I give you guys a plays, lay down, smack, home run, everything is typed out for you. But at the end of the day, stock options are very complicated. I don't recommend people to just jump into them. I really don't. Not that I'm a financial advisor. I just think that a lot of people lose money. Like 95% of traders lose money because they're not patient and they don't have a mentor and they don't have guidance and they don't have structure in the way that they invest. So I'm grateful that you guys watched this video. I'm really happy that you find interest in my content. Follow me on all platforms. And until next time, sue me out.